Hi everyone, welcome back to the channel. Today is an exciting day, yet for 2025 inauguration of Donald J. Trump. Trump is back, and within hours of stepping into the Oval Office, he's already signed multiple executive orders. But what does this mean for your money? Especially in the S&P 500 market, where investors are on edge. Today, we're breaking down the major executive orders that could shake the stock market and your personal finances. Buckle up because this might be a bumpy ride. Executive orders, one of the fastest ways a president can make big changes. But what exactly are executive orders and why do they matter to you? In simple terms, executive orders are legally binding orders from the president used to direct the federal government. And depending on what's signed, these decisions can immediately affect sectors of the economy, stock markets, and even your wallet. Think of executive orders like the president's fast pass to implement policy without waiting for Congress. They're used for everything from foreign policy to business regulations, which means they can send shockwaves across the market, especially when they involve tariffs, taxes, or industry regulations. Let's break down some of Trump's key executive orders that are expected to have a real impact on the markets and your financial future. First, Trump wasted no time extending corporate tax cuts. These cuts are a boon to big companies, especially those in the S&P 500, as they increase profits by lowering the amount companies pay in taxes. Expect stock prices to climb in sectors like tech and industrials, which thrive on these savings. Another big one, Trump signed an order rolling back energy regulations. This means cheaper operating costs for oil, coal, and even renewable energy companies. The energy sector in the S&P could see some volatility, but long-term, expect a boost in traditional energy stocks as they get relief from regulatory hurdles. Infrastructure spending is another big focus. Trump's orders fast-track large-scale construction projects, which is great news for companies in the construction and materials sector. Stocks in steel, concrete, and heavy equipment might see a bump as new contracts pour in. One executive order you may have heard about is Trump's delay on the TikTok ban by 75 days. This move is stirring the tech sector. If the ban eventually goes into effect, U.S. companies tied to TikTok's ad revenue, like social media competitors and tech service providers, could benefit. However, delaying the decision gives these companies more time to strategize, making the market response unpredictable in the short term. If you're interested in exploring more on this topic, check out our previous video, where we dive into possible scenarios of a full TikTok ban and how it could impact the tech and media sectors. The link is in the description. Finally, Trump's reinstatement of trade tariffs could shake up the global market. Tariffs on imports mean companies relying on foreign materials may face rising costs. Sectors like auto manufacturing and tech could feel pressure, which could cause short-term dips in stock prices. If you're finding this breakdown useful, don't forget to hit that like button, subscribe, and click the notification bell so you won't miss any updates on how these executive orders might affect your investments. So what should you expect in the S&P 500? The market could have mixed reactions. Corporate tax cuts and deregulation might push prices up, especially in sectors like energy, tech, and infrastructure. But the reinstatement of tariffs could inject uncertainty. Short-term volatility is expected, but long-term, if the corporate tax cuts fuel growth, we could see the S&P continue its upward momentum. Now here's what you can do to position yourself smartly. Diversify your portfolio. The market is likely to be volatile. Spread your investments across different sectors to balance risk and reward. Look for undervalued stocks. With all the changes, some stocks might dip temporarily. This could be a great time to pick up undervalued companies with strong growth potential. If you missed our previous video on how to identify undervalued stocks, check out the link in the description to dive deeper into value investing strategies. Keep an eye on energy and infrastructure stocks. These sectors are poised to grow with deregulation and infrastructure spending. Look into companies in these industries for potential gains. If you want to stay ahead of these market changes and understand how each policy affects your financial future, subscribe to the channel and check out our next video on the best value stocks to buy right now. Together, we'll help you navigate these turbulent times and find opportunities in the market. Thanks for watching. Stay informed, stay sharp, and as always, happy investing.